Hi traders, Nick here. Wanted to review BIDU. It's getting pretty interesting here. This is a daily chart. You can see to the moon. I think somewhere around here the company came out and told us, they actually told us we're going to do way better than everybody's thinking. We're going to blow it out of the water. So really to short it is pretty insane. So have I missed the rally? Maybe, maybe not. I can't really tell from this, so I have to zoom out a little bit. So let's go to a weekly chart. And this will show us about 5 years worth of business. You can see it's butting up against its all-time high. It's almost there. So this is usually a test, a double top or not. So what are the odds of double tops? I like the balance around this yellow bar right here. But remember, this is where they told us that they're going to do a lot better than you think. So when a company is this confident, it's hard to short it. So the easy, stupid way to trade it is to go with the flow, unless you know something different. Otherwise, you're just hoping they falter. And this, of course, is inside the macroeconomic picture, which is everybody's buying everything and every dip is being bought and nobody's afraid of everything and we're not going to get any bad news ever forever, right? So that assumption there, we're trading, but we're looking at BIDU from this perspective. All right, so this still doesn't tell me the whole picture. What happened before that? What is this all about? Was this a dip? Was this where it started from? So I continue to zoom out. But from here, I can tell you, it's a coin flip whether they're going to beat the all-time high or not. And I think it is market dependent. In other words, they won't fall all by themselves. So this is BIDU monthly. So now we're looking at the candles that are monthly. We were only seeing this, and I said, what about this dip? And now I showed everything. So this stuff was not showing on the other chart, which was weekly. So every bar is 1 month. Again, this was where they told us. This is the all-time high. So this is the yellow line I like. And if I zoom out, this is the green line I like. So for balance, if they overshoot up and they overshoot down, somewhere in the middle lies the truth, right? So bearish. However, what if we're here? This, erase all of that. This right here is this right here. In other words, it had an all-time high, it fell from it. It had an all-time high, it fell from it. Okay, it fell from it, and then it recovered. And it got back to the all-time high. What did it do? Break out or break down? Kind of both, but it broke out. Obviously, so this point in time is here. And we ask ourselves, is it going to come back, do this, meaning $300 plus, or is it going to fail? That's the question. So if I'm making the assumption that the market, if my thesis that the market is not going to correct for any particular reason without a black swan, I have to bet up. So but if I'm bearish about the whole market and thinking, they're going to collapse by the end of the year or correct, then chances are BIDU cannot do this all by itself. So I'm not going to address the bearish position because obviously you just buy puts or put spreads and wait for it to happen. But if somebody wants to capture this potential, there's a lot of potential here. History tends to repeat itself, not to say that this is exactly what's going to happen, but if we're here again and markets are bullish and the company told us that it's going to go to the moon, why would I not want to chase it versus short it? So, and I can do it cheaply. Number one way I could do it, buy calls, buy the stock, but that's not cheap. $300, whatever, where is it? $250, $245 per share. It's not cheap. And I would need a big bag of money in order to profit big time. So I could buy calls, straight up calls. That's the most aggressive way of doing it, but it's a lot cheaper than $250. For a couple of bucks, I can buy calls out a month or so at whatever level I pick. Or I can buy a debit call spread, meaning I buy a call, I sell a call behind it to lower my entry costs. Of course, that caps my profit. When I buy a call naked, my profits are not capped for as long as the company price rallies. What does the call do? It gives me the right to buy the stock at that price. So if I pick a call, say at $280 or $260, and I pay $1 for it, I'm making up these numbers. I haven't looked up the premiums yet. Then if it goes to $300, with that price I paid, that gives me the right to buy it at that level I chose, so 280. So if it's at 300, I already made $20 minus what I paid for the call. I can choose to not buy the shares and just sell the call, because if I paid $1, it's going to be $5-6 if it goes through it. So provided time hasn't run out. So time is an issue. What's the most, the least aggressive way of going long is by doing a debit call spread near the money. So it is expensive because it's near the money. And it is a coin flip, but that's what it is. It'll either work out or not. But I get a chance to double my money. And I give myself time. So I can pick November, December, January. Because at the money, the spread is going to cost the same, whether it expires this week, next week, or a month, or 2 months from now. They're going to charge me about half of what the spread is. The difference is, if price do rise, the shorter dated ones give me profits faster. But they also lose faster. So if price goes against me a little bit, my conviction, falters. So it depends on personal preference. I usually like to go out at least a month and a half, maybe 2. This way I have time on the clock and I'm not freaked out on every tick. So this would be the least aggressive way of doing it. What's the most aggressive way of doing it is buying the calls, whichever way you want to do it, calls, call spreads, lottery tickets, and selling puts and put spreads to finance those calls. So if I sell a put, it's also a bullish position because I'm betting against that put. That gives me money. And if I'm right and it rallies, that money is mine. And guess what? That money helped pay for the calls, so I'm long for cheap or free. That's the most aggressive way of doing it. But the point is, we are here. Are we going to do this, or are we going to give back? And that's the bet we're making when we're trading BIDU right now. I expect questions.